In Millennials and Money, a closer look at the hot trend of millennials trading meme stocks. Joining us now is John Bever, president of Phase 3 Advisory Services. Good to have you on our show. But John, is this a passing fad or is this something that's here to stay?
So is it a passing fad? It's been around several times, only under different words. Because what's happening with these meme stocks is they have a new platform, and that is a social media platform. And Wall Street Bets on Reddit has been one of the influential places. But really, it's one of these things that goes around in a cycle, and it kind of comes along with the bull market. We see this during bull market periods. And these meme stocks are here because of the millions that are on social media that are making money with them. So as long as they're making money, they're going to continue to participate in this. In fact, it's estimated that there's perhaps 15 million plus possible accounts participating in these meme stocks.
Do you think, as a money manager, though, is it worth it to invest in some of these meme stocks?
That's a good question, and it's one that a lot of people are asking. The first thing to understand is that these are very, very risky because it's really a momentum play on steroids. Because what happens is a company will get into trouble, their stock will start to go down, the shorts will step in, and more shorts will add in. And what's happening is as they're shorting the stock, the price is dropping. Well, then it does gather the attention of particularly Wall Street Bets that says, hey, maybe there's an opportunity here to make money because really there's value, or perhaps they see an opportunity to create what's called a short squeeze, which forces the shorts to actually cover and can really rocket the price. So is there value there or not? Probably not as much as it looks like there is. And so the problem with that is that it leads to risky investing. Now, on the other hand, though, they can actually create some resurrections for some of these companies that are in trouble that need money, because as they're buying the stock, causing the shorts to cover, and the stock keeps going up, it creates an opportunity for the company to raise cash. So they can actually go into the market at these higher prices and raise a bunch of cash, which for some of these companies may be exactly what they needed. But when the price was low, Wall Street wasn't willing to really provide that money, but they can go out and they can do a new share raise. So it's interesting. It might not be the best for the individual investors because they end up with dilution, but it actually may be a good thing for some of these companies.
What do you think the future looks like for this meme mania?
Well, historically, it takes a major bear market to put an end to some of these things, and we don't see a major bear market on the horizon at this point in time. Think 1930s, 1970s, the early 2000s. So this is probably here for a little while, maybe 5 years, maybe as much as 10 years that it will probably run its course. But just like the tech bubble, it ultimately comes back to free cash flow and earnings, back to fundamentals. And so we don't really have that with most of these meme stocks. So I do see it as something that will pass perhaps in a decade.
Good to get your thoughts. Thanks so much, John.
My pleasure.
Go to businessfirstam.com for where to see our show on TV.